And good morning, guys. How's everyone doing? This real quick. I'll just give me just 1 sec. I'll be ready to roll. Oh, something's wrong there. That doesn't look right. Let's see if we can fix this real quick. Hold on 1 second. Hey, we're gone. There we are. And I think we have everything we need to get started. So a couple of notes just real quick. Past performance is not indicative of future results. I will throw this up because I have to. Basically says trading futures, you can lose a ton of money if you don't know what you're doing. I ask that you not follow me blindly. I'm sharing my trade plan in hopes that it makes you a better trader. This is for educational purposes only. I follow my process. Anyone looking for a miracle or for a system that never loses money should move along, because I lose money. I'm human. I make mistakes following my own process, and I struggle just like everyone else. The difference being is that I stay as close to process as possible. When I get in a ditch, I have a place to go back to immediately. And when I am on and I know my process is on, I press like hell on my trade size and on my focus and really push my trades. So that is how I make my money. Just real quick, let's start with ES. Obviously, everything's pushing overnight. Here, I'll show. This is ES overnight. This is when I left the office this morning. We've obviously pushed up into resistance, right? This is NQ and CL overnight. CL's been pushing all night long, just hasn't had a downside rotation. If you look, that's this chart starts at London Open. Actually, not quite yet because it's 3 a.m., but London Open, we've just been trending up. Since then, there's been 0 short triggers on CL all night long. I have no idea why anyone would want to short that other than resistance, but that thing is on fire to the upside, showing. And remember, for everyone who's banking on the German economy falling apart, oil is a leading indicator on world economies, right? And they're saying demand is up. I don't know anything more beyond that. I'm not an oil predictor. I'm not a fundamental analyst. I'm just saying when oil's up, it's just a general rule of thumb. Economies are doing well, right? And here's NQ overnight, which is pretty much the same story. We couldn't quite hit support overnight. This is 3 a.m. London Open. You can see we consolidated right near yesterday's lows, if I got that right, or highs. I'll answer that question really quickly. Why don't I have yesterday's low in there? I will correct that immediately. Because I didn't mark it off. Oh, you know what happened? I know exactly what happened. I need to fix my, I apologize. I need to fix the NQ chart. I accidentally deleted a profile chart there. And give me just 1 second. I'll actually do this after the open, but just to get the basics done really fast. I have this down, and then I'll go in after the open and correct it. I had to close the chart down. I deleted a pretty important chart. And instead of rebuilding it, I just decided to delete the work I did last night. There we go. Let's make sure I don't forget this little anomaly right there. And this one right here, that goes light blue. And I'll have to fix CL in a moment. But the charts, members, the chart's already posted properly right, on the Slack channel. So you should be able to see them without a problem. And that fixes this problem. So now when we look at CL, there we go. You can see that we consolidated right above that light blue zone. It's a valid support area. If you watch the trade review from last night, you'll just see it can get traded through pretty easily. So make sure you have a solid setup if you're just taking this blindly, that you're willing to take a loss, because it can get slipped through pretty easily. This is actually where we're at right now, is decent support. I know it's a resistance, excuse me. I know it's a wide area, but it is valid. And I'm going to have to rework my CL profile chart. But the one that's posted on the Slack channel, guys, this one right here, right? This chart right up here, okay, that is valid. I just had to delete it after I got done with it accidentally, so I'll get it fixed. Anyways, long story short, risk on, driving up, right? And my experience has been in 20 years of trading, when you get a down day like we had on Friday. So let me jump over to the profile real quick. I also rearranged my monitors last night, so I'll have easier access to this information. So let me do that really quick. Okay. So it's going to take me a minute to get used to it. Here's the ES profile, right? So see this? We're just driving way up. Like, there's nothing bearish. If you look at that chart and you go, I'm a mega bear, something's wrong with your outlook, right? Bearish is like once you break a swing low, lower highs, lower lows. It ain't, I'm calling a top and it's breaking down, right? Next, during yesterday's session, I pointed out very clearly, this is the 50-60 retrace, plus there was a half gap right there. I was very clear. There's high odds that we get a big response out of that, and that's exactly what's happened. We traded right into that 27.90. We're obviously trading 28.22 now. And so where's the natural push back up before you would expect your fib traders to respond, right? So that would be right in here. Now there's a caveat to this area right up here. Okay, let me collapse this real quick. Hey, there's an anomaly sitting right in there, and it's a valid anomaly sitting right there at 28.30 to 28.32. It would make sense that that becomes resistance. However, buyers are in overall control. You want evidence, and I would not just go, hey, we're going back to the lows. I'm shorting that and leaving the position on. Not a muy bueno idea. If you have a good setup intraday, that's fine. And that is a reasonable area to expect a counter rotation. But we're not in a bear market. I would not expect the whole market just to fall apart out of that location. And then ultimately, this needs to get repaired upstairs. When I look at a chart, right, I look at it like this and I go, well, what needs to get fixed on this? And so there's three clear areas that stand out immediately. We didn't hit this. This needs to be repaired. See these two anomalies right here? That needs to be repaired. That needs to be repaired. But then there's this big stretch all the way up here. So then you start just doing your math, right? We closed 28.05. We've been getting about 30 points up. That puts you out about 28.35, right? So the likelihood of any of this, you could technically put a zone right there as well. The likelihood of any of this getting tested up here is low. I'm referring to this, and I'm referring to this. That's low. So this area in general would be a good area to exhaust, right? That would be a good area to exhaust. This would be a good area to get a response from. If we came down, got down to this anomaly, then trapped back in on the low, that'd be a good area to push back up because it would still be within that 50-60 range, right? And then the last pieces that we want to look at, even though we're gapping, we're trading 28.22, go through your checklist. Are we able to fill the gap? Half gap? Can we trade underneath the first 5-minute bar, right? And can we consolidate within the first hour if we hold above this level right here within the first hour? The likelihood of closing that becomes significantly lower. So let's say holding above being 65% that you push out, 45% that you push lower. But usually if you can't close this in the first hour, you end up with pushing out towards the end of the day. Secondly, there was no sell pressure yesterday. All the sell pressure came on one day from one piece of economic news, right? We closed on the low. And then our thesis yesterday was it's unlikely to get two closes on the low back to back. I'd be cautious on the short late in the afternoon because usually it pushes to the mid and or the high And we've been just trending out ever since we hit that second tap at 27.90, right? So then you take your last piece, right, which is your swing, and this area becomes your 50-60 retrace right in here, which coincides with your 20 to 30 up, where we've been getting exhaustion for the most part. So this area, intra-day, I would look for counter rotations for pushes back down. Any of this is actually valid for responsive buying. You're just going to look for the setup. And then I would look for a long out of 27.84.50 if we could get it, if we could possibly get into that area. I would look for a long out of that area. And that's my trade plan on ES. I'm not bearish. And then the other logical thing is when you pull this together, you look like you have, we pull this out, you just look like you have a big balance area. With that being the top of balance, this being the bottom of balance, and these areas up here being edges, meaning pushing out. And so my concept would be that we're probably going to trade through this area up and down pretty easily, right? And then find responsive buyers below and responsive sellers above. And that thesis changes if we consolidate and break above that 28.66, changes the picture. Then your clear target above becomes 27.90 to 28.90, excuse me, I apologize, 28.90 up to 2900. Let me throw my, there we go. I can see a little bit clearer. That's it. That's what you have to know. This is easily traded through. Edges, right? Probably find responsive buyers. And then we're looking for the intraday setups that I'll cover in just a moment. Let's go do NQ really quick. There's a profile. Here we go. So again, on NQ, just this is the target up. I don't know if we've hit it yet or not. That's your target up. This is what needs to be repaired, is this area generally right up there. And then you have a white zone. That's a great location for a short if you could stretch up there, right? I would very much want to be short or look for a short setup out of this location. It would be a big fat stretch. I don't think we can get there today, so it's not an issue. I don't think it's an issue. On the downside, right? A, can we get back into yesterday's high? Question number one, right? B, we should find responsive buyers here. Why? It's a big stretch. And then see that little area right down there? Yeah, I'm good to go there. I'm looking for responsive buyers there. So I'm throwing out the levels where I think we'll respond, right? And then finally, if you look underneath, all these levels are valid down below. And again, I've posted them on the charts. I'll fix the NQ chart here shortly so the levels show up. But this is not a bearish chart. We couldn't even make it to the 50 retrace. Right here, I'll show you. There's your swing low. Right, and that's just the most recent swing low. To the swing high, the 50-60 retrace is sitting right here. And we didn't even get into it. So for all the bearishness, I know it could go lower and blah, 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 blah. No 50 retrace from the last swing, right? And same picture, right? You pull that in. And if someone will explain to me how that's a bearish chart remotely, how you would want to look and go, hey, I'm going to put all my equity. And so here's the question, right? When you're following someone who goes, oh, it's bearish or oh, it's bullish, right? When I trade, I'm putting my money behind where my mouth is, right? So people can talk all the shit they want, right? About trading and execution. And I'll show you yesterday, right? Right here, I posted the chart up. So this is from the members Slack channel. This is yesterday's ES in the day, right? Okay. This is what people do who run a room versus people who trade, right? See how I wrote right here? This 2790 was a key location. Now, I did get the NQ out of this area yesterday, but I did not get ES at all, right? So if I'm running a room and my goal is to stuff as many people in that room and make a living off my trading room, right? I'm going to write boom, resistance, boom, support. I'm going to go all over Twitter and wrote, see, I told you, perfect location, right? Here's the trick to that. There's a difference between posting a level on a chart and taking your trade. I did not take the trade. As a matter of fact, I traded by my own measure horribly yesterday. It wasn't a horrible down day, but I traded horribly. I left a huge trade on CL on the table, right? You can post up all the levels you want. You can make it look as easy as you want in the rearview mirror. You still have to have the component of your brain working, a discipline to follow your trade plan, ability to go, hey, not only do I think it's long at the 50 retrace, and we're going to go, kudos to Peter, who did say that, took the trade and killed it, right? You have to be able to put all those pieces together simultaneously, right? So in running a room, which I've learned over the years, I could just go and say, hey, look at my support resistance levels. I had these perfect, right? Yellow, strong support resistance. Light blue is resistance and support, but very light. And all those areas worked for a trade. And if that's all I cared about, that's where my focus would be. But it's not what I care about. Why? Because I make my living off of my trading, right? Not off of my room, not off of my coaching. So this doesn't matter to me if I can't get myself together to get my trade pulled off, put on the risk, and then read it well enough to know, hey, we're going to go up and I'm not going to take my risk off. Okay. So long story short, I had the charting part right, which I'm very good at. The trading part, I didn't have so right yesterday. Okay. And in NQ, I was down on the day, even with my last trade. Putting in, I just barely scratched it out with some scalps at the end of the day to get my P&L to a slightly positive read, but it was not pretty. Okay. So the last piece is when you look on Twitter or StockTwits and someone goes, this is bearish, blah, blah, blah. Look at the lessons from the past. All you have to do, right? Look at where it gets easier to short. So if you scoot this over here and someone's calling a top over here, well, yeah, they got it right. I'll give them that. They got it did roll down, right? But if you drag this, if it'll let me, there we go, right? You go back just a little bit. There we go, right? Or maybe not. I don't have enough days loaded. But if you look over here and someone called the top over here or said we were going lower over here, right? They easily lost a boatload of money right through here, right? Calling it and not putting your capital on it doesn't mean a whole lot, okay? Whether you have a small account or a large account, it just doesn't mean very much, period. End of sentence. That's the story, okay? There's nothing bearish up here. And if you'll also look from the time we hit the high, the easier your short was on the second wave down. And if you didn't stop shorting pretty promptly in January, you got annihilated, okay? So if someone says this market is short, ask them two important questions. How much capital do you have on your position, and how long are you going to hold it, right? Because I'll tell you the level of commitment. I'm not committed to the short side at all right now, outside of a scalp, and I'll bring my stops down, and that goes for NQ, CL, and ES. I'm just not looking to press one way or the other. Let's cover CL, last chart. And then I have one other thing to show y'all. Okay, here's CL. And, okay, number one, not a bearish chart, right? Number two, this is a trending instrument. See, when it starts to go down, tends to keep going down. When it starts going up, tends to keep going up, right? We are in balance. This whole thing is a whole big, fat, wide balance area. That's why we're trading all the way through here, right? This is your resistance right where we're at right now. This is a U.S. session only chart. Does not include European or Asian sessions. People email me on this. It's not open for discussion. You want to chart it however you want. This methodology works really, really well for me. I blew the low yesterday. I had it long and let it stop me out, break even. It's a total bonehead move. I have nothing more to say about that. Right now, clues. We couldn't break the swing to the right, to the left, excuse me, right? That's not bearish. That's your swing low. You couldn't break it, right? Here's your high. You have a poor high. That's relatively easily broken. That's a poor high, right? We had excess at the high and the low yesterday intraday. But at your edges, you actually have poor lows at the – you have a poor low and a poor high at your swings, meaning either one of those can be easily broken. However, what's really interesting is They had all the ability to come down and fix and repair this area yesterday, and we did not. It was a big clue that we couldn't get down and repair that, because that theoretically should be easy to fix. It didn't get fixed. Responsive buyers, and it's pushed all night. We're now on the other end of the range. So here's where people get lost, right? Don't get lost in the weeds. Yes, we are at the top of the range, and yes, it could get balanced. That's not a bearish chart under any circumstance. And if you look all the way over here to the left, right, I'm going to highlight it. It's approximately right here. Then I'm going to go tools, zoom in. There we go. Bottom of an open window, top of an open window, gap fill. You stretch that out. Mid of the half gap, just like ES and NQ and everything else. There's an anomaly sitting right there as well. That would, if you're just going to take something blindly, that's what I would take blindly. And that's up at 60.92 to 61.10. It would have a couple of things. It would break a swing. It'd be about 100 ticks over the current swing high. It would really suck some buyers in if you can get a short setup out of that location. And then the natural magnet above that is this right here, is that 62.27. I don't think we get there today, but tomorrow's oil inventories. We had a drawdown on the last oil inventories, I think 7 million barrels. Again, I could care less what the number is. I just care how the market reacts. And so when we come all the way back over here, right, and you ask, okay, how did the market respond is what you're asking. Who cares what the number is? Who gives a shit? This doesn't matter, right? So if you look at the number, we came out with oil inventories on Wednesday. That was either the 20th or the 21st. I'm going to go 21st. That's Thursday, Friday. Excuse me, it's Tuesday, Monday, Friday, Thursday, Wednesday. Oil inventories, trend day up. Balance day. This is normal. See how we trend up? Next day balance. Trend day down. If you look at the overnight, balance, push up, trend day up, right? So when you look at this and you say, how's the market responding to that number, right? And what the market is saying is, hey, we expect another good number tomorrow. And this was the Germany number right here. And the market's right here. And the market's kind of saying, okay, everyone freaked out. We were way extended. There was people that had to take profits, and we don't care anymore. So remember, when you're shorting up here, you're looking for exhaustion in these areas, and you're not looking for it to just flip and roll all the way down. Number two, in the U.S. session, in order to be bearish, you got to get underneath your swing low, which is currently 59.76. Notice that's creating a half gap and a gap fill in between there. We're likely to get a response off that 59.40 if we could somehow get back to that, which is doable. It's less than 100 ticks, right? And then I'd look for resistance up here in the 61 level, and then at that 62.27. This is not a bearish chart at all. This is a bullish chart. This should have been very easy to get repaired, and the market kind of flipped the finger at it and said, nope, we're not doing it. So dips look viable, and shorts, you better be skilled. That's my 2 cents about that. So I'm going to open the floor up to questions, and then I have one more thing to show. I'll check real quick, see if we have any. Let me mute everybody. Sorry, guys. 1 second. Nope. Do not know. There it is. Okay, so long story short, everyone's muted now. Long story short, buyers are in control. That is open drive higher, and we are pushing into a white zone. Again, I don't trade the first 30 minutes, so I don't care one way or the other. The last thing I want to show, so for the guys with the smaller accounts, I told you I've already qualified a Top Step Trader account, and I went in and qualified a One Up Trader account. And they were nice enough to, if I can find it. Okay, and they actually sent me that. So congratulations, you're getting funded, right? So the only point behind this is I want to make sure that if I'm telling people that I'm coaching that they're actually paying, that they actually follow through, right? They actually follow through. Now you get to go through answer their questions, and they do have interesting rules. They're different than Top Step Trader Just, but I think everything I'm reading tells me that they will pay you. The rules are challenging, but hey, you don't have the capital. They do, right? At the end of the day, that's what the story is. And so if you need capital, you're going to have to follow someone else's rules, right? And that's a reasonable expectation. When I ran a hedge fund and I had traders, they had to follow my rules. Whether anyone thought they were reasonable rules or not, I didn't care, right? I was the one responsible for the capital. They were going to follow my rules. One of my rules was no trading in a half hour. So you could talk in the first half hour. So you could talk to me until you're blue in the face about how great the setups were in the first half hour. We weren't doing it. I still don't like to do it, but we definitely weren't doing it then. I didn't trade Fed. That was one of my rules. I don't care how far it worked, right? I didn't trade when there was a Fed speaker, and I didn't trade non-farm payrolls. That was all, right? That was all my rules. Those were all reasonable rules to me to make sure that I kept the capital safe. And here's the difference between individual traders and fund managers when you're running a fund. Individual traders had all the confidence in the world, because usually when you're coming into this business, you're coming in from an area of confidence. I know exactly what I'm doing and how to do it, right? And there's no way I can screw it up because I've accomplished all these other things in my life, right? Whether it's a 4.0 in college, CEO of a company, airline pilot, venture capitalist, and then you come to the market and guess what? Everyone's freaking smart. All of us have accomplished stuff. Your confidence means shit. Right? It really does mean shit. Doesn't matter what you've done before, because now you're trading against everyone who's also done everything before. And you got to figure out the game plan. And all of a sudden your confidence levels plunge. And the key here is day trading is the hardest level to succeed at, right? Swing trading is easier. Investing is clearly easier, right? Market goes up, buy, hold, right? Doesn't take a rocket scientist to do that. But when you're trading with someone else's money, when it's your money, all you're going to do is you're going to post on Twitter or stock twits when you're awesome. And if you lose your money, you're just going to go away quietly. That's just how the business works, right? No one writes in there, hey, I got my ass totally annihilated. Well, a few people do, but most people go, I got my ass totally annihilated. And now I am going to tell it to the world. No, people either lie or they just turn it off quietly and go back to whatever they were doing to make a living before, right? Trade your capital like you're running it for someone else, not like you're running it for yourself. What you want, right? It's very hard to explain a loss to someone who's giving them your money to manage by going, I really felt it was short and I just took it short and I just sat in the short and I moved my stops and I displayed no risk management and I over leveraged on the trade and I blew up your account. I'm sorry. Unfortunately, there are people out there that actually do that. But most professional managers would never, ever do that, right? What we're trying to do in the room is have a repeatable process. And when I'm off, like I've been since Friday, by the way, right? Minimize damage, keep the losses small, stay on process, go back to more and more to the basics until you catch a rhythm of what's going on, and then go get paid. That's effectively what I'm doing day in, day out. Oops, I forgot one thing here. Give me 1 second. Wrong range, chart settings, settings, 12. Okay, SW, got, there we go. My encouragement to you would be if you're going to trade for someone else like One-Up Trader or Top Step Trader or anyone else on the face of the earth, they're going to have rules. My suggestion is you would be a better trader if you could follow their rules, even if you disagree with them, because it forces you to be disciplined and it ups the pressure to do it correctly, right? So anyways, long story short, that is my 2 cents about that. I'm not looking to short this morning, even though I do think we'll roll down until after 9 a.m. I'm pretty sure we have econ top of the hour, right? Let's make sure of that. At 10 a.m., we have consumer confidence. That could actually push the market one way or the other. That's in 10 minutes, right? And then my other encouragement to you would be, if you learn the process, you don't have to follow me blindly, right? And that's the whole goal of the one-on-one coaching. It's the whole goal of having the room. If you're looking for someone to call trades, there's a lot of people out there, and you'll live and die by their sword, right? But the sucky part about following someone else's trades blindly is you have no freaking idea what his or her process was to get to that point. And I'll give a great example of that. There's someone in the room who had someone trading their capital for them. They talked about the something or other volatility index, okay? And they were trading oil based on the volatility index, and when it does blah, 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 it's oversold, and when it does blah, 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 it's overbought. And guess what? That works for a little while, but then it stopped working, and they blew the crap out of that account, right? And the person who had given the money had no idea whether it worked or didn't work, right? Because they didn't do any homework. And they learned from that lesson. They said, I'm going to learn how to do this for myself, right? So I understand if I'm losing money, why I'm losing money, and I understand if I'm making money, why I'm making money, right? That's a really freaking important idea when you talk about that, right? Because let's say, for example, I said this white zone was magical and we're going to reject out of it. Well, lo and behold, it did. But what if we had come up into this white zone and you'd taken the short and we blasted straight through? Well, and you took one example. Well, now, does Simon know what he's doing, or is he an idiot and just drew a white line on a chart and said it would reject? Or by the same token, now I can get out on Twitter and go, boom, 28.30.50 to 28.32.50 resistance, 5-point roll to the downside, boom, paid, right? Well, why did I get paid? No one has any freaking idea why I put the line there, right? Maybe it's because I freaking measured and said every 3 inches on my chart I put a white line, or every 6 inches, right? I'll tell you the reason why I did it. It's no secret, right? The reason why there's a white line there is because this little tiny anomaly sitting right there in the profile, and we usually reject out of those when they're sitting out in the middle of space. See how I had these marked off lightly? That, if you look on the chart, that one was white. There's a reason why that one's white. There's a reason why this one's light blue, right? But you should know, and there's no secret. I didn't invent this stuff, right? Go get Mind Over Markets, boring-ass book. Read it, know it, learn it. Auction theory. It works, it repeats, and there's a reason why it works, right? It's not the only answer to figuring out how to make money in the market, but it's a start, right? It's the starting place to understand how the auction works up and down, right? So if you look at this market right now, right, and you go, well, is that a top or is that a bottom? Well, I have no freaking idea what that is, right? What I know is that's an anomaly. We usually reject out of there. We've done that, right? And notice for those, there was no correlation on NQ. NQ actually pushed up. And what did you learn from yesterday? ES was able to push back to the 50 retrace. NQ wasn't. Guess what, boys and girls? That means there's stronger buyers in NQ than there are in ES. Semiconductor index is on freaking fire. The earnings should be fantastic out of that sector, and people are trying to buy it on dips. So the conclusion to that, if I'm struggling, right? Bill sent me a great message yesterday. He had a good day. He hit most of his marks, and he spotted areas for improvements. I missed most of my marks, and there was a reason for it. I went back. I did my work. I went to sleep early. As you can tell, I was up very early. I posted at 2 in the morning. And now I'm ready to go and make my money for the day. But if you're looking for a messiah in this business, it doesn't exist, right? And there's no one right way to make money, but there's a million wrong ways to do it, right? So my encouragement to you is find someone you can relate to, right? Find someone who has a method, right? A 1, 2, 3, A, B, C. If this happens, then I do this, right? And then find someone who has a decent amount of discipline, which is the hardest trick of them all, and who actually follows their process, meaning like I do. If I start to draw down on the day, I stop trading, right? Because drawdowns are that death mark. right? It's hard to build those accounts back up once you draw them down. And guys like One-Up Trader and Top Step Trader won't let you draw down, right? They will not. They will close those accounts, just so you know. And you should treat your own account the same. If you can't trade profitably on a regular basis, you should not be day trading because it's too easy to blow your money out, and almost everyone does. And it's guys that are really successful that I've met. I talked to a gentleman the other day picking up my daughter from school. He goes, "Oh, I tried to day trade for a while. I lost $100,000. I went back to my business," right? So it's hard. It takes time. Follow a process. Be reasonably disciplined, and find someone to mentor you who fits your profile and your personality, right? And that's not necessarily me. And if you're looking for someone and I'm not it, ask me. I'm happy to point you in the right direction. Anyways, guys on YouTube, I hope that helped. Have a great day. If you'd like to visit us in the room, send me an email. Yeah, I think I posted it, but if I didn't, TRADEN, as in the letter N, Nancy, PERFORM, tradeandperform@gmail.com. Happy to extend a pass to you. Trade smart. Take your time. There's no one I know who is a professional trader today who doesn't wish they had another year or two under their belt before they started trading real capital. Seriously. Because it's not that they didn't make money. It was the pain of losing money that is excruciating. It sucks. You walk around questioning everything about yourself, and it's no fun. It's a long journey, and then trying to make that money up sucks as well. So that's my talk. I know it's not overly cheery. Buyers are in control here, guys. So until we get through this econ data, and then oil, I hope they sell it somewhere today because I sure would like to buy it at some point. That's a good push up. Oh, and keep up with oil, right? On the bigger picture here, where's my 5-minute chart? I reorganized my screens so I could find these more easily. So, and I have it. I know I do. So give me 1 second. CL, there we go. I got to rework the chart, but so that's a 5-minute chart on CL right there. So it depends on how you want to look at it. So I'm going to look at it from a US session perspective, right? Which means we opened up right here. It is not bearish until we get behind and hold behind this 50-60. If we could somehow get to that 50-60, I would expect a response first time in. And then the bigger picture 50-60, again, see from this 4:10 a.m. I think that was the swing low. That's the second big picture area where I would expect a response. See if I got that right. Well, no, I didn't get that right. That was a swing, but it was just an intra-morning, intra-session swing. Let's go with this. It's pretty much that right there, pre-London Open to where we are currently. So it's that. All right, so if we get back to that 59.70, yes, please tee me up for a trade. This is gone. And I will fix the CL and Q charts in a moment. And hopefully I do a better job today, discipline-wise, than I did yesterday. I'm not looking to short straight up. So, and I don't buy the first half hour. That kind of puts me in wait-and-see mode, right? Anyways, thank you all on YouTube for joining me. Again, if y'all like a pass, just email me. I hope everyone has a great day. Trade smart. See you later, guys.